Welcome back, YouTube. I'm your daily trader, Ben.
And I'm your other daily trader, Kagan.
And today we're going to be talking about the different types of order flow and how you can use order flow in your analysis. As of right now, a lot of people understand what order flow is, but they do not necessarily understand what parts of order flow are in more higher probable situations than other different types of order flow. So to get into the basics, before we get into anything crazy like this over here, the first thing I want to go ahead and tell you guys is that there are two different types of order flow that we see across all time frames, right? And that is both wick order flow and OB order flow. And just to show you a quick live example, what I mean by wick order flow is that we are simply connecting the wicks similar to how we would connect two OBs, creating order flow, right? Such as this right here. All the wicks are doing is that they just become a smaller refinement on the 1 minute chart compared to taking the entire OB. As we know, wicks themselves have OBs within them.
Right. Ooh, sounds stormy over there.
Yeah, I got some bad weather over here in the US right now. So now let's get into the fun stuff and pretty much see how we can use order flow. The first thing I want to go over is the difference between external versus internal liquidity order flow. Let's first start off with this diagram, and after we go into this diagram, I'll then go into some of the more introspective concepts on the real charts, right? On the actual price graphs themselves. It's very simple. External order flow is literally order flow just coming in from the outer layers of price. Generally, we want to find a liquidity buildup, and then after that liquidity buildup, we want to see where the dots are connecting. In other words, we kind of want to mark out our structure points and see how the market is responding to each of those structure points, right? This is clearly our external order flow, and this is clearly the other part of external order flow. Now, a lot of people are trading internal order flow, right? Especially on lower time frames. Now, I'm here to tell you that it doesn't matter if you're on the higher time frame or lower time frame. What matters is understanding how the liquidity is moving, right? Now that we understand this diagram, basically what it's showing is we are coming from external order flow into more external order flow, and then this is internal order flow that was respected. However, we can again hedge the external order flow, and then internal order flow is then used as liquidity, right? A lot of people might expect to go ahead and buy off again here, when in reality, internal order flow is less probable than external order flow, right?
Okay.
Now that we have an understanding of what external versus internal order flow is, right, let's go into some live examples.
Great.
So like I said before, what we want to find are our large pools of liquidity that started the order flow, right? In this case, if I zoom in to Euro USD here, I can see that this is a large stack of liquidity on the 4-hour or daily. I want to refine this a little more and see where order flow first established from an external point of view. Externally, I can see that my order flow established around this area here, right? From the buy, yeah.
So how far out on the higher time frames here can you take order flow from? Like way back?
Right. So let's take a look. Like I said, order flow really matters when it comes to proximity, right? So in this case, this would be one liquidity pool. This would be one liquidity pool, and this would be one liquidity pool. Right? So if we were to start over here, this would all be order flow from an external point of view, right? And externally, we can get everything as small as here, right? And perhaps grab this as well as external order flow, right? Because we are on the higher time frames. Now, when we start moving in to lower time frames, we're going to see that external liquidity is the only thing we're going to be trading during the intraday. But hopefully this helps you understand. There's even more order flow on the top here, as we can see, right? And this is actually internal to what is external out here, right? And then we can even look even further to see even more external order flow kicking in around here, right? And basically what it's going to allow you to do is ping pong price from a higher time frame perspective, right? As we come back down into this example here, we can see that order flow established right around here, right? And perhaps we can take these areas as order flow. All of this is external order flow, so we can expect price to come right back down to here and then explode again.
So would you say that, see here, you used the wick order flow into an OB, right? So would you say it's not as powerful or doesn't really matter, or, like going into a wick or going into an OB using order flow is more powerful?
I actually prefer wick order flow, right? Why do I prefer wick order flow? Because wicks are telling me that price has rated and ran, right? And when I see a rate and run, right, that basically tells me that institutions and banks were definitely buying here. Why? Because price reacted super swiftly and fast, right? Because price has reacted super quick here, there's no reason as to why it shouldn't react right back again here. And in reality, this is all just more order flow, right? And what's happening now is we have more inducements, right, coming to this area here for this to become more valid, right? So as you saw in my previous diagram, we had our external order flow, but if we zoom in, right, I want to see where those inducements are. I want to look at my wicks, right, and I want to start identifying my internal order flow directly after my external, right? And I can clearly see that this wick actually came to this OB here, which had a clear imbalance, right? All of these all had clear inducements, right, for this to become a valid internal order flow trade, right? We clearly had a break of structure in which this POI caused the break of, right? And now this external order flow all has inducements across here, causing this to sell off. And as you can see, this is where we got into shorts, and this is exactly where we got into buys.
Which was the external sells into the internal buys into the external sells.
Exactly. So you can primarily do your entire analysis just on the 4-hour higher time frames. I actually recommend it. We even have order flow kicking in right here as well.
So I know a lot of people, and I know it's a lot more now, past couple of months, people talking about inducement, as all those red arrows that you put in, inducement into the order flow. How important is inducement into the order flow?
Nowadays, I want to say that inducement into order flow is important from an external perspective. From an internal perspective, it's not really needed, right? If we come into this example right here, we can clearly see that price has flowed from here, right? And let's say that we don't even have to consider this top part here as inducement. Let's say it just flowed right into that wick, right? This right here, because of the proximity, because of how short-lived it is, right? We can very easily start selling again around these areas without it having to properly induce. Why? Because of proximity. So hopefully this gives you an understanding of some of the different types of order flow, external versus internal. Right now, how can we use higher time frame order flow with lower time frame order flow? Well, it's actually very, very simple. Let's say price is coming from external order flow, right? External liquidity order flow. And we've probably seen this diagram happen over and over again. Price comes here, and we have a break structure, right? Price comes up, it induces. We have another break, right? Here's the inducement, right? And then here we resume more order flow, correct? And price comes up to here. This is one of the most seen variants, right, when it comes to order flow. Now, what most people do is that they're just going ahead and taking an instant entry and they're not waiting for confirmation. Well, the best way to confirm order flow confirmation is to, for example, go into the 1 minute, right? So let's pretend that within here, right, we now want to look for the 1 minute. We want to see on the 1 minute price coming up, We want to see it sweep liquidity right here. We want to see it break structure as of right here, come right back up and mitigate right here. Now we want to see it come right back down again, break the structure point, and watch it produce order flow on the 1 minute for very powerful confirmation entries. And then this right here is how you'll get your refined entry.
Mm.
Now that I just kind of did this, it reminded me of
Yes.
something.
Very important.
So now I want to talk about smart money order flow traps, in which no one really understands what that is yet because it's relatively new, right? So
How new would you say? So, to give everyone just a perspective.
probably a month or two.
Okay.
The reason why this is relatively new is because so many people are over trading order flow and all of these concepts. And I'm going to show you how to avoid, or how to avoid your SL getting hit. Basically, what's going to happen most of the time is that you're going to see this type of pattern happen. Let me just finish this diagram real quick. All right, you're going to see this occurring. Wow, this is a really bad diagram. You're going to see this occurring 9 times out of 10 throughout the day. All right, it's going to happen quite often. Right? Let's pretend we're on the 1 minute chart here. Right? Most people will assume their stop loss to be right here. Right? That's exactly where you should not put it. Rather, your stop loss needs to be above these highs over here. Why? Because what's happening is a lot of people are over trading order flow, especially on the lower time frames, to get their refinements. And what's happening is that price is actually coming up, stopping people out of those refined entries, such as here, right? And then price is going in the direction.
Got it.
Right. So I just wanted to bring note to smart money order flow traps. If you have been trading this way, if you had your stop losses originally here, just understand that price is really looking to stop hunt this area. Right. So your entry could sometimes be right here rather than right here.
So is there any way, except for extending your SL, is there any way to, kind of see these smart money traps coming, or not really?
Look at the liquidity within the POIs. For example, if there's a bunch of liquidity resting here and then the imbalance occurred, well, most of the liquidity was here. We want to see this liquidity get swept. There's a high chance that liquidity can get swept. Mm-hmm. Now, let's say it's the opposite. Let's say the liquidity buildup was mostly here and we already saw it sweep within the major POI, right? Well, if price looks like this, well, then perhaps we can keep our refinements, because then we can find order flow from this area here. This can touch right back here and then produce order flow again. Pay attention to the lower time frames within your higher time frame POIs. Let me give an example here.
Okay.
Let's say we had this POI such as so, right? Let's go into the 1 minute. Our liquidity, our main liquidity buildup was here, right? Here's the liquidity, here's the sweep, right? We clearly already started producing some sort of order flow to this part of liquidity here. I can expect my reaction to happen around this area, right? Simply because that gets swept, right?
And so does the smart money traps, does it usually happen with more the external or the internal?
Internal. Smart money traps are happening more so internal. External order flow, you do not need to worry about the smart money order flow trap happening more often than not, right? A lot of the time you're going to get rate and runs on external order flow like we've seen here today, right? Or even if we wanted to qualify this right here as well, that external order flow will always be respected. Most of the time should always rate and run. If it doesn't rate and run, then it is not the proper external order flow.
Got it.
Yeah, hopefully you guys have a better understanding of how to use order flow from very different variations here. There is a lot more to it. And if you want to learn more about it, I do post a ton about these concepts on our Instagram. Our Instagram, if you want to follow us, feel free. You can DM us, ask us a bunch of questions. But our Instagram is @Seisners.trading. trading.journal, and we'll go ahead and put up a handle for you guys for you to put down onto Instagram. And hopefully you guys learned something new today,
Yeah.
because a lot of these concepts aren't simple. Make sure you backtest with them constantly, and over time you'll be fine.
Backtest. Got it. All right.
All right, y'all. Peace.
Peace.